Gold prices are on fire, breaking through the $2,500 mark. For those of you waiting for a pullback on gold prices to buy or to start accumulating gold as part of your wealth preservation strategy, well, I'm here to tell you, you might not get that pullback. There's no time better than now to start your game plan and strategies surrounding gold and silver investing. That's why it's critical that you make an appointment with us at ITM Trading. You can easily do so. There's a link below in the video description where you can book a Calendly with one of my colleagues, and they will do all the work for you. They're going to talk you through and walk you through a wealth preservation strategy centered around owning physical gold and silver. Do not waste any more time. Gold's just going to keep skyrocketing here. On that note, let's get to today's video. With gold prices breaking through $2,500 an ounce, the metal keeps defying expectations. So where does this analyst see things headed? And what does he see in store for the mining stocks? And of course, I'm going to ask him silver. Jeff Clark, the man, the myth, the legend, the man behind Paydirt Prospector.
Yeah.
Welcome back to the Daniela Cambone Show.
Oh, it's great to be back with you, Daniela. Thanks for having me. Lots to talk about.
Yeah, so much to talk about. I mean, how have things been for you, first and foremost?
Oh, good. Yeah, I'm still, on a personal note, still recovering from the back surgery, but that's doing okay. I'm still able to travel and everything. But, I really love what I do. So I wake up every morning and look at what companies I'm going to be writing about. So it's a lot of fun for me. And, more importantly, I think it's not just fun, but we're in the right place at the right time with the right metal, right? So I think it's going to be fun over the next few years for us.
So let's talk about that, right? Because look, it's more fun to work in this gold environment with these prices, Jeff. But a lot of
Right.
folks are, I get stopped. Hey, Daniela, I want to get into gold, but they're almost afraid here at these levels because they're like, what's going to happen? Could we go higher? Is there going to be a pullback? I mean, how do you see things?
That's a great question. And the answer to that is there are always surges in the middle of a bull market, and there are always corrections after those surges. In fact, in the last bull market, Daniela, I documented all of those, and there were something like 18 surges of over 21% in that last gold bull market from 2001 to 2011. And there were 20 corrections of 6% or greater. So it's the very proverbial 2 steps forward, 1 step back for the gold market, just like a lot of assets. But the point for now is we're in a gold bull market, and therefore you want to buy on dips, and you may want to take profits on certain companies if there's a big run up or a surge. But this is very common. So a 6% correction would not be abnormal at all. Of course, we don't know when that's going to take place. But that's the average of what we've seen in the past, at least.
How much does it matter? Because I know we've spoken about Powell and the Fed, and we know Jackson Hole just wrapped. But we saw gold rallying in a rising rate environment. Now that rate cuts are on the table, is this a bullish sign?
Oh, absolutely, at least based on history. And once he made those comments, gold did rise that day and silver. So, we're entering an easing phase. Gold traditionally performs well during those easing phases, even if there's a recession, even if there's a stock market correction, even if there's a stock market, a bear market in the broad stock market. So there's a lot of reasons to be bullish, and that's just one of many reasons that gold could really ignite here. So there's just so many vulnerabilities surrounding us that you must own gold in this environment, and we're going to own it until there is an honest, sound monetary system. That's how long we're going to hold it.
Well, and then we don't let it go then.
It depends on what the monetary system is at that time. You always want to have some gold in your portfolio. But what I'm saying is that if gold goes to $5,000 or $10,000, and all of a sudden the system breaks down, and a more honest, sound monetary system is put in place, that's asking a lot of politicians for sure. But if that takes place, perhaps you don't need to own as much gold. That's my point. We're going to be overweight gold, meaning 20% of your portfolio in physical metal until the monetary system is revamped.
How close are we to that reality for you, of that becoming a reality?
When I started with Doug Casey's firm way back in the day, that was a big topic then, and we talked a lot about it. The impression I think we gave, which was incorrect, is that we were on the precipice of it, and that has not happened. And we're still talking about it. We're still talking about de-dollarization. Big topic. It's going to happen, but it's not happening as quick as people think. And so I'm not really worried about the timing of it. I just know that as a citizen of this country, that meaning the U.S., and as an investor, I want to own enough gold to get through whatever that transition period looks like. So we don't know what it's going to look like. We don't know what it's going to look like when we come out the other end. But you have to own physical gold to get through that. That's the point for now.
How did you come to that realization, Jeff? I think I've known you, I don't even know how many years now, and I don't think I've ever asked you this, but how did it dawn on you? Because we all have that moment. I mean, we weren't taught gold, at least I wasn't taught about gold in school. I don't know about you, Jeff, but none of us are
No.
taught gold in school. So unless you went to a special school, I don't know of. How did you come to that realization like, hey, yeah, gold's the only thing that really makes sense here?
It's based on fiat currency. It's based on the devaluation of that fiat currency. For the first time in world recorded history, all currencies in the world are fiat. We've never been in that position before. The Fed constantly dilutes our currency. The purchasing power, everybody knows this, of our dollars have decreased dramatically just in the last 50 years, let alone since we went off the gold standard. So, I think it starts there, and it's going to end there as well. So it's, I was taught to own gold. In fact, my grandfather bought one of the very first gold eagles that was manufactured back in 1987 by the U.S. Mint. He passed it on to me. He's in minor heaven now, but he passed it on to me. He's one of the very first ones. And so there's a lot of lessons there that I was taught about real money. So it comes down to owning real money that can't be diluted and devalued and debased.
With the advent of Bitcoin, did you contemplate that as a solution?
That's a fair question. I don't own any Bitcoin any longer. I did and made a little money, but not as much as some people. But I'm not quite ready to go full electronic yet. I do worry about government involvement into the Bitcoin sector, trying to control it. If there's some kind of move to, make Bitcoin a currency that you can go to the grocery store and buy with, I can see the government stepping in and putting a lot of restrictions on that. They may not ban it. Let's hope they don't, because it is an earmark of freedom. That's the basis of Bitcoin, in my opinion. But I do fear what the government could do, and therefore I don't want to be overweight Bitcoin just at this particular point in time.
Do you see a return to some sort of gold standard happening where the dollar is backed by gold?
That's a possible solution. That's a possible outcome. There's one of several ways this could go. We could, go to some kind of commodity-backed currency. We could go to a gold-backed currency like we've done before. We could go to a gold and silver one. The U.S., not a lot of people recall, is that was on a gold-silver bimetallic standard way back in the day. We could go to a multilateral system. We could go to the yuan backing it. There's a number of ways this could play out. A gold standard being one of them. That would be a more honest system, because the idea that you can't print and spend more than what the gold value is of the currency that you have. So that would make politicians more honest. we'll see if that actually happens.
Jeff, are you as bullish on silver? I bring this up because I reposted a story about Samsung developing a new solid state battery. Can't tell you the number of impressions that tweet got, but there was
Yeah,
so much interest in that story and how this could be
right.
a game changer, obviously, for silver. What are your thoughts on well, how much of a game changer that would be if it does come true, and whether you're bullish silver?
Oh, heck yeah, I'm bullish silver. But as far as that Samsung article, yes, if that actually develops and comes to fruition, the point there is that those batteries are going to require more silver than the current batteries that are being made. I don't remember the exact numbers, but it's a significant amount more silver. When you combine that with the demand in solar, which I remember some analysts predicting 5 years ago that solar was going to peak and drop off, and the exact opposite has happened. And there's no let up in that. We're continuing to do that. And remember, those panels, solar panels, don't last forever, so they have to be replaced and recycled, and so that requires more silver to come into the system. And you have technologies developing now, and a lot of those technologies, those scientists are realizing that silver is the best metal for solar, and so they're expanding their base and what they're manufacturing. One example is the dual-sided, you know, uh, uh, solar panel that'll adjust depending on the sunlight of the day to capture more. So you need silver on both sides of those panels. So yeah, I'm very bullish on silver, and I think your audience knows silver historically has outperformed gold in bull markets. So if we're in a bull market, we can expect silver to outperform gold, at least from a historical standpoint.
What do you tell the folks, because in the gold and silver world, there's some disgruntled people who are expecting, much bigger performance from the metals, who say they listen to certain pundits telling them not to get into the S&P, that the S&P was going to crash. The crash has not happened. S&P making higher highs. Um, and they were just waiting for commodities to take off. I mean, what do you tell those folks?
I think you want to have some balance in your portfolio. You don't want to be like me, all into gold and mining stocks. Having some balance is appropriate, and probably advisable. So there's that. But I think the timing of this is that uh, commodities, gold, and especially silver, are still undervalued as a group relative to other asset classes, including the S&P, the Nasdaq, the Dow, foreign stock exchanges, all of that. So you have a big imbalance in that ratio. If you ratio those things out, gold and commodities are very, very low. There's many people that have documented this. It doesn't mean it's imminent, but it does imply that a big, dare I say, super cycle could be coming here in terms of commodities and gold and silver.
Do you like the critical metals? And I mean, it could be argued silver is one of them, but do you like copper? Do you like the copper story?
Oh yeah, I like the copper story. I like the silver story, obviously, but copper has a supply demand imbalance that is really going to come to fruition. We're going to see that crunch, if you will, the next year or two, depending on what happens. If we get a recession, it might take a little longer, but that's a real thing. Electrification of the world, green energy of the world, they all require more copper. So the demand is going up, and yet the supply is weak. It's not growing. Now there was a surplus reported last month in copper inventories, but when you look at the trajectory of where demand is going and where supply is going, they're going in opposite directions. And so within the next year or two, I think we're going to see some type of crunch again. The timing depends on a recession, because believe it or not, the copper price has never risen in a recession, never, since the 1960s. And so the copper price probably is going to fall in a recession. But again, on my end, I'm not necessarily betting on the copper price as much as I am on companies that can, push a project forward and make a material difference.
So on that note, because like I said, I've known you a long time, and I've always said Jeff's just one of the more balanced, level-headed. I mean, you've never put out crazy projections. You've always really been really level-headed when it comes to covering the metals. And I don't think I've ever seen you so bullish or excited for the space. I mean, I saw what you tweeted. The fuse is lit here.
Yeah. Well, I definitely don't like making predictions. I remember, Daniela, we interviewed in the aquarium in Toronto several years ago, and I pounded the table, look, the Fed is wrong about inflation. It's going to go much higher than what they think. And as a result, silver is going to soar. Well, I got the inflation part right, but silver, as we all know, was pretty much dead. So it's because there's hundreds of factors and variables. There's thousands or millions of investors. There's billions of dollars at stake, even all with their own self-interest in mind, pushing the price around. So making an accurate prediction is really difficult to do. However, that said, I do believe the fuse is lit for the junior miners. We've all been waiting for that to happen. We saw the gold price really just steadily marching higher, and yet the juniors just didn't go anywhere. Many mining stocks didn't go anywhere because of that rise in the gold price. I believe that fuse has been lit now, and it's not based on a rising gold price. It's not based on the Fed cutting rates. It's not based on likelihood of a recession or a stock market crashing or monetary easing. It's not based on any of that. It's based on one thing internal to the industry, and that is earnings and cash flow from the producers because of the higher gold price. We actually charted this out, and the six largest producers in North America saw their earnings grow by double digits, and one, Newmont, was triple digits. Anything at 5% or higher is considered statistically significant, and all of these were double digits or triple digits. When you get to free cash flow, it's even better. And free cash flow is where many analysts think is a more honest gauge of corporate health because it's easier to, tweak and play with earnings, but less so with free cash flow. Free cash flow for those six went up double digits, triple digits, and in the case of Newmont, it was up over 1,300% cash flow from Q2 of this year to Q2 of last year, and it was primarily because of the gold price. Think about it. Inflation was rising in costs with all these miners, but that had pretty much plateaued, already been figured into costs. So this big jump in the gold price really went directly to the bottom line, and it's really showing, and that has major implications for our industry.
On a positive.
Oh, they're all positive. What I mean, first of all, for the companies themselves, it makes them healthier. They can buy back shares, they can pay dividends, they can pay down debt. Secondly, it implies that M&A is back on the table now. A lot of us wondered in the junior sector, why aren't the miners, the big producers, buying these small juniors? They're so cheap;
Mm-hmm.
they could get them so cheap.
Mm-hmm.
Part of the reason is because they didn't have the cash flow that they really wanted before they go out buying things. Now they can. They have that cash flow. They're paying down debt, and therefore I do think this is going to ignite M&A. And then, of course, the big reason is I think the fuse is lit is because historically we know that this all starts with money flows into the sector. It begins with the metals themselves. Gold is obviously seeing a lot of inflows. That's why the price is up so much. So we have that. And then it flows into the producers, and now we have that because there's a lot of green on the screen with them right now. They're going to attract a lot of capital simply because they're so profitable. And watch the stock market. When the stock market gets weak and a lot of Wall Street and Main Street are looking around to where to put money, their mining stocks are staring them in the face because they're so profitable. And then that cash will move into the developers, and then it'll move into the juniors. It'll go down the ladder. We've seen this many times historically through many cycles. And so in my opinion, the fuse is lit for juniors. It doesn't tell us how soon it's going to happen, but the fuse has been lit, and it's good. It's going to start inching closer to when big money flows into the juniors, demand really rockets, and we see a lot higher stock prices in the juniors.
Let me ask you this, Jeff, because people might say, well, why take a risk with juniors that are traditionally a lot riskier and not just play it safer with the mid tiers or the barracks of the world? Obviously, yeah, if they do take off, the gains are huge, but what made you decide to focus on the juniors?
I think just being in the industry for as long as I have and seeing what can happen. My dad was a gold prospector, I think some people know. So I'm really personally more attracted to the juniors and exploration and discovery and things like that. So that's me. But everyone should make their own risk assessment. What are you looking for? And if you just want exposure to the industry, well, just buy GDX or GDXJ. The reason I don't buy them is because the bad come with the good, right? You have companies in there that are, you know, pretty clearly not good investments. And so I'd rather pick my own stocks and make my own basket. I'm not going to always be successful with that. No one will be. But that's sort of my personal bias. I'm aware of the risks. I'm willing to take them. And as long as you spread that risk out and you have a basket and don't put all your money in one or two, I think the odds of success, especially at this time right now, I think the next year or two, we're going to be having a very different conversation, Daniela.
Right. And I go again, it just gets back to the point of, taking back power, right? You have way more control, or at least feel like you're in control. And that's the feedback I hear from gold investors, right? People who own physical gold, is they feel that they're at least doing something to protect themselves up against the system. Um,
And the system's going
outside
more,
of what we've been, sorry.
yeah, the system's going more online, more electronic, all of that. Even Bitcoin's that way, right? So gold is really the last bastion of having something physical you can hold in your hand that you can take with you wherever you go that will always hold its value. The price will fluctuate, but the value will always be there. And so it's quite understandable when someone understands what money is that they would want to own a meaningful amount of physical gold.
I guess just to wrap here, Jeff, I mean, folks watching are, you know, the majority of the emails I get, people are really concerned, right? They're obviously about their jobs, their security. I've had so many retirees write to me saying they've had to come out of retirement, take part-time jobs because they're not making it. I mean, they keep telling us inflation's going down, but we all know it's not. Any of us who do our own grocery shopping, we all know it's not. If you're pumping your own gas, you know it's not.
Right.
And they want to know, they look to folks like you who are experts, Jeff, and they want to know what are they doing? Like what, what do you feel we can do as investors, even just outside of investing, outside of money, or like how do you prepare for what we're going up against here?
I think the important things would be you need to be debt free. So try to pay off your debts as much as possible. And then, if you can, try to have multiple streams of income, more than one stream of income. Have a side hustle on top of your job in case something happens.
Mm.
And then, yes, you want to own physical gold because if you're not doing well now, or you see people that aren't doing well, imagine it getting worse if we do get into a stock market crash or the U.S. dollar does blow up. It could get a lot worse, and so you want to prepare for that. Hey, let's hope it doesn't happen, and all the plans you put in place you don't need. Great, no harm, no foul. But I think those three things would probably be my best advice. At least that's what I'm personally doing.
Jeff Clark, it's always great getting your thoughts. You could read more from Jeff at Paydirt Prospector. What's the site, Jeff?
Well, it's at thegoldadvisor.com. Everything starts there. I think some of your viewers know we did purchase Gwen Preston's Resource Maven list, so all of her
Mm,
subscribers are with us now. Peter Kraut of Silver Stock Investor, he
yes.
came over as well. So we're rocking and rolling. We've got a new website and lots of resources there for people, both free and paid. So I'm ready for this thing to
Yes.
happen, and I will tell you I'm preparing for it to happen.
Wow. Yeah, you definitely are preparing. And yeah, Peter, I saw joining your team, great silver investor and friend of our show. I wish you continued success because you're just really a great guy, Jeff, and you deserve
Uh,
it all. I really mean that.
oh, thank you so much. I'll
So,
slip you that $20 later. So yeah, thank you.
this is not sponsored, folks. Don't listen to
Yeah,
him. It comes from the heart. Read
right.
Jeff's stuff. It's really good. Like I said, he's been writing since those days with Doug Casey. You've been at it a
Yeah,
long time, Jeff.
yeah. When you and I met on
Yeah.
the beach at Grand Cayman years
Oh,
ago,
yeah.
that was
Wait, that
pre-children for
sounds
you.
bad, Jeff. We were at a conference.
Oh yeah, yeah,
Let's
yeah. Right.
clarify.
I didn't mean it the other
We were
way.
at a gold show. Those were the good old days when they had gold shows in Cayman. Not so bad, right? Not a bad gig.
Right, right. That was fun.
Yeah. No, it was fun. Good
Well,
times.
thank you for your nice
Jeff, we'll catch
comments.
up
I
with you.
appreciate it.
We'll catch up with you soon, Jeff. And thank you all for watching. We'll have more great content coming your way here on the Daniela Cambone Show at ITM Trading. Don't forget to sign up at danielacambone.com. Thanks for watching.